Good morning and welcome to the World First Weekly Report for Thursday the 19th of May. Well, over the last week we've seen the Aussie dollar freefall. It's gone from $1.850 down to $1.550, and this is due to some underperforming data locally. The employment data came out last week and we had 22.1 thousand jobs lost in the previous month, and we also had the wage price index out. The wage price index came out at 3.8% and both were beneath expectations, and this eases the pressure on the RBA to hike interest rates. Given that we're in the midst of a resources boom, we should be seeing jobs added and high wage price inflation. However, with the recent data out last week, this led the Aussie dollar lower. In the US, the economic data was also weak. This was really the only saving grace for the Aussie dollar, with equity markets down significantly during parts of this week. The Aussie had the capacity to go lower. However, with weak economic data out of the US, this saved the Aussie dollar from being dragged significantly below $1.550. The data out of the States, there was housing starts and building permits. They were both beneath expectations, and we also had the NY manufacturing index out, which was also below estimates. Furthermore, on the economic data front out of the US, we should be seeing the recovery out of the US continue. However, last week we saw the fits and starts that we're used to. Timothy Geithner came into play last week, the US Treasury Secretary. He noted that the issue regarding the increase to the US debt level should be bipartisan, and that they should increase the debt level. However, with the political capital at stake, it's highly unlikely that this will be the case. In the Eurozone, there's been a lot of data out over the last week. We've also had some concerns emerging regarding Greece's sovereign debt. We had officials out of the ECB argue whether they should be saving or restructuring Greek sovereign debt. ECB board official Stark noted that it would be a complete catastrophe if they were to allow the Greek debt to be refinanced. However, other finance ministers, including from Luxembourg, noted that they should just let the Greeks refinance their debt. This is holding a lot of risk to the euro, and with the recent scandal engulfing Strauss-Kahn, the head of the IMF and a European born, there is a lot of downside risk attached to the euro with regards to the sovereign debt issues. However, with the GDP figure coming out better than expected this week at 2.5% year on year, which was really German inspired, we've seen the Aussie euro come off over the last week. If you'd like an update on the market, or if you'd like to book a trade, don't hesitate to get in touch. Enjoy your day.